I'm Ben Schiller with CoinDesk Managing Editor, and we've got a superb group of people here really representing the whole world of crypto, and we're going to be talking about emerging markets and really how emerging markets can take to crypto, can use crypto to fill in gaps with existing traditional finance and the weaknesses of some of those systems. So I'll introduce the panelists here. We have Trung here.
Yep.
We have Maggie. We have Chris, and we have Mosh. So I'm going to let them explain a little bit about their background and their company, and then we'll get into some questions. So Trung, you want to start off?
Hello, everyone. Can you hear me? Okay. Thanks, Benjamin and Consensus, for the invite. So basically, I'm proudly from Vietnam, and Whole Station is I'm doing the crypto business for around like 7 years. We do mostly like OTC trading, and Whole Station was like 3 years old right now, and it's a wallet. You can it's non-custodial, but you can do a lot of things on OTC directly in the wallet.
Maggie?
My name is Maggie, and I'm the CEO and co-founder of TrueBit. And I started the crypto journey about 8 years ago, and the first thing I do is I start a venture capital. It's called Crypto Group, and we started to do a lot of primary market investment, secondary market trading, and then since 2020, and as a chance for me to travel in LATAM. And then all of a sudden, like I started a business in LATAM, and now we've been there for 5 years. Built a platform, the crypto platform over there, mainly focusing on crypto trading and also crypto payment. Thank you.
Chris?
Yeah, hey everybody. I'm Chris Maurice, CEO of Yellow Card. We are the largest licensed stablecoin payments orchestrator for Africa and the broader emerging world. I grew up in the US. Before this, I was selling Pokemon cards on the internet when I caught the crypto bug.
Good practice.
And then I met a Nigerian guy on the internet that told me to move there, which I did, obviously. Started the company. Today we work with businesses, banks, financial institutions of all shapes and sizes, helping them make international payments, manage treasury, and really just access dollars using stablecoins.
Mosh?
Hi, Moshe Schlesser, chairman of Ubit. At Ubit, we started in 2017, focused on creating infrastructure to enable payments using crypto. Our concept is to be an open ecosystem, allowing any wallet to connect to us and for people to be able to use their crypto in the real world.
So Moshe, I was just wondering if we could start with you. You were just in El Salvador, which is kind of a very interesting test market for crypto. Obviously, they went on the Bitcoin standard a few years ago, and now Tether has gone there. It's going to be headquartered there. What did you learn there about the adoption of crypto in an emerging market?
Sure. So it seems, El Salvador is a fantastic use case to show about financial inclusion and enabling people to kind of leapfrog from like a very primitive structure to the most cutting edge, crypto payments. I think every business is mandatory to accept Bitcoin there. But we think overall, more and more people were going to move to stable coins, to being able to pay through their wallet directly in merchants. And it's been a phenomenal experience over there to see what's going on.
Chris, so Africa probably least advanced in terms of kind of traditional financial infrastructure. Give us some examples of how crypto has helped some of those markets to evolve.
Yeah, I think, look, you don't need traditional financial infrastructure anymore, which is, the beauty of this space, right? The customers that we work with, right, the businesses, the banks, the financial institutions, the importers, exporters, et cetera, that we work with across the continent, the majority of them have one main thing in common, which is that they don't really care about stablecoins. They don't care about blockchain. They don't really care about any of the stuff that we're talking about here. They care about solving their problem. And, that is, I think, really the power of this technology and the power of stablecoins more broadly is it enables it enables businesses around the world, in parts of the world where you don't have access to USD, in parts of the world where banks cannot facilitate international payments at any sort of scale that's necessary to be able to continue operations. It enables them to take back control of their own money. It enables them to be able to actually facilitate these payments themselves. And yeah, it's I think that's probably the the most powerful thing about it. I think we spend a lot of time on education and trying to make sure that everybody understands the technology and self-custody and things like that. And realistically, a lot of these guys don't care. They're interested in solving their problems. They're interested in making payments. And so, yeah, that's that's what we focus on. It's just a very practical use case for the space, for the technology to enable businesses to be able to continue to operate in markets they otherwise wouldn't be able to.
So Maggie, just take on that question as well. I mean, on the one hand, you have a technology that's tremendously useful, it can fill in a gap, but it does have this reputation for complexity and difficult to use. How are you working to abstract some of that complexity to make it easier for people?
Yeah, I think one very important thing that was also Chris mentioned about a lot of businesses, they really don't care about the stablecoin blockchain. They don't know anything about that. And we're not into educating either. So we try to innovate and build a product that which is very easier for them to use and without any hassles. So for example, like our product, and when user log in, it's very simple interface for them. They don't even know you're using stablecoin or blockchain behind the scene, but actually you're solving their problem and pain point. So I think product-wise, it's very important to build something that you can serve them from to provide a very seamless user experience compared to traditional financial or decentralized platform, because they don't have to remember the private key and all the complicated stuff.
Right. Sure.
I think for me, it's similar for Vietnam market. It's what Chris has been saying. People don't really care about how to actually what is crypto, what is blockchain is about. They care more about the payments. And for the Vietnam market, the reason that the people involved in the industry is mostly on a few categories. First one, investment, of course. But the second one can be the devaluations of the currencies in Vietnam, and people want to hedge that with USD or USDT. But buying USD in Vietnam is pretty hard. You need a lot of compliance and control. So that's why the OTC, the payment stuff like this appear for them to hedging their position. And overall, in the remittance services, they start using that as well. In Vietnam, also this year, the regulations stand out pretty clear. That's a lot of things changing and very positive for the Vietnam market in this area.
Okay. What about the impact of regulation? Do you feel that it's getting easier now in the markets that you represent to do business? And how is maybe the impact of the US market with the kind of liberalization with the Trump administration? How is that kind of changing the conversation about regulation where you are? Marsh?
It certainly seems that the regulatory environment is getting better, obviously under Trump. Some of the markets that we operate in Latam, like Mexico, there's an interesting use case where a lot of Mexican employees go and work in the U.S. and they send back about $100 billion to Mexico every year, which is very costly and and with a lot of friction. They use the typical old school Western Union that charges them 8 to 10%. And $100 billion, that's a lot and it takes a while. So, we think, in the markets that we operate in, given the, especially for stable coins, the regulatory that we're going to see through the U.S. will enable a much more seamless path to be able to do global remittance, and make it more instant and cheaper. And in a market that's $100 billion that moves from the U.S. to Mexico, changing it from $10 billion being charged to $1 billion is still profitable enough to make sense, but at the same time make it 90% cheaper, make it much more accessible, frictionless, and I think with regulation it's going to be much more easier to be done.
So if I'm a Mexican living in the US and I'm sending money back to Mexico, it's now 1% versus 8% with
At
Western
least 8%.
Union?
It would probably be typically would be between 8 to 12% in a while, and then it goes door to door from, where you are in the U.S. to the Mexican peso to your family. To be able to enable that instantly, almost instantly, and at 90% cheaper, 1%, that's where we are, and that's where we think there's a huge opportunity. And there's similar markets to that, like the Philippines and others that just send a lot of people abroad and they're sending back money. And it's just costing them an arm and a leg, and we think that could be a huge disruption. And it's not just like an edge case, these are huge markets, it's $100 billion a year. So I think with the right regulation around stablecoins, it'll be much easier to on-ramp and off-ramp, and with our infrastructure, it could be enabled in a big way.
Right. Chris, were you going to say something?
No.
Okay.
I can.
No, you look like you were about to say something, that's why I asked. Maggie, I mean, you were talking about, you deal with the Latin markets as well, and we were talking earlier about how a lot of maybe Chinese companies are using Mexico as a kind of staging post to get into the US market, and then now wanting to transfer using stable coins, the kind of B2B payments. Just talk about that and how they can use TrueBit to do that.
Yeah, I think Mexico has a very special location between the U.S. and China, and now the nearshoring become a big trend out there. So a lot of Asian companies, very Chinese companies, they are moving their manufacture to Mexico and building manufacturing and producing a product over there, and then they will ship the product to the U.S. And that actually increasing a lot of trading value between Asia and Latin. I think yearly wise is around $480 billion of transactions, and traditionally they're only thinking use bank rails, and you have to go to Swift and have to wait 5 to 7 days, and with at least 2 or 3% of the atmosphere you have to pay. But now by using the stablecoin and by using our solution, you can receive your funds or payout, massive payout within a day. So it's cost zero with blockchain. Also connecting with the bank APIs, you can get your fiat within 30 minutes. You will imagine how amazing is that, and also you can control very low rates, and as what Nassim says, like 90% probably less than the traditional way.
Thank you. Chris, I mean, are you mainly transacting using stable coins, and would those mostly be USDC and USDT?
Yeah, USDC, USDT, PYUSD if you're feeling adventurous. I think, to your original question though, the regulation, when you look broadly across the African continent, has gotten, there was just a massive sea change that we saw about 2.5 years ago. And the regulation writ large has improved pretty significantly since then, where it was, I would say, gray/hustle before that. And obviously things have changed a lot in the U.S. now since in the past couple of months. Pre-November, the African continent was the single best place to start a company in stablecoins and crypto more broadly. You had the most access anywhere in the world. You had the most access to regulators. You had the most sort of clarity in key markets. You have a number of sandboxes available. You have in general, you have regulators that are looking for innovation to spring up locally, as opposed to being developed somewhere else and then being imported at great expense. And I think this trend has been going on, and now with everything going on in the U.S. and sort of the Trump effect, it's only compounding. I had a regulator ask recently why Trump gets so much credit for embracing Bitcoin when it was actually President Tinubu of Nigeria who was the first one to say that he liked Bitcoin. So people have really taken notice, and there's sort of a race going on now within the continent to get some of this legislation through. And you're starting to see this in Kenya, Morocco, and a number of other markets where they're racing to get through legislation to encourage these companies to start there and to move there, to grow there, to hire there, and develop locally within each particular country.
Do you think that Trump gets too much credit for liberalizing crypto?
Hey, it should go to Tim, apparently.
What do you think, Trump?
Yeah, for me, like on the perspective of Vietnam, it's probably the combination of Mosh, Chris, and Maggie together. And especially like right now in Vietnam, if you want to send the money out, you have to at least pay around like 3% on the forex rate, additional 2% on the transaction fee from the banks, so around like 5% plus, and a lot of paperwork as well. So with the growth of like Tether, USDT across the whole world, and also like the position of Vietnam, very late nature between like China and US, we are very good position. There's a lot of good trades there, so the exposure is very large. Also, like under the new regime of the Prime Minister of Vietnam, the innovation is the key for the growth, and by this year, regulation of crypto is going to come out, and also what Chris said about like sandbox and of the innovation in this area will be available in Vietnam this year as well.
I mean, what particularly are they doing in terms of regulation?
So the regulation like the overall like crypto framework, and in the future like they legalize a stablecoin, and another few other steps will be the local exchange. Yeah.
Okay. I'm interested in this role of USDT Tether because a lot of people think that the new stablecoin legislation in the US is going to make USDC more usable, more palatable than USDT is. I mean, we're only going to see this kind of bifurcation between, USDT for emerging markets and USDC for other types of markets. Is that what?
That's exactly the same. What you say is actually correct. In Asia right now, people tend to use USDT more as the method of transaction using Tron network as part of that. And in the US, it's more like USDC or Europe. So if the transaction make they have like at least like the liquidities in the middle to transact, we cannot like change the habits of the Asia, like to move 100% going over to USDC or changing, like the US to using the USDT. So we are just in the middle and make sure that the liquidity on both sides is good, and whatever the client needs, we also provide that. Yeah.
Okay. Mosh, I'm interested, you have a kind of global view of things. Are there any places in the world that we maybe don't know about that are enthusiastic kind of users of crypto for types of use cases that we're talking about?
I think it's obviously still an education phase for a lot of people around the world, especially in the places that need it most, which is like cash economies you see in Africa, and in Latin America and places in Southeast Asia. I think one of the, to touch on the question you asked before about Tether, one of the things that they've been doing is kind of creating these endpoints, pointing these areas of the world that are very, very cash intensive, and kind of bringing that back into the digital economy and enabling them to use it worldwide or locally with the traditional rails. So it's not just like, it's very easy to compete on like a stable coin. You can build a stable coin second, having the infrastructure in place across the globe to enable the on-ramp and off-ramp. That's really where it becomes competitive and interesting. And I think one of the things that Tether has been doing is building out that infrastructure to enable that on-ramp and off-ramp, which I think USDC is lagging behind. Of course, in the US, you already have a regular payment infrastructure. It's not really needed as much. So they might be the biggest in the US, but it's like, who's using crypto in the US, right? You want to use stable coins in places that are actually needed. And then worldwide and emerging markets, the main focus of Tether was to build out that infrastructure. I'm not a spokesman of Tether, but they are our partners. So.
Right. What do you think?
So we leave this to the clients. So we do have two type of clients. So one type of client, they want the flexibilities. They love Tether, they use USDT. But there's another client, they're institution client. They have internal compliance requirements. So they will point out that I have to use USDC, and it really depends what kind of the client they are. For us, we use anything that what they want, but we provide different liquidity for them. So we also partner with Circle, we also partner with Tether. So.
Do you think the stable coins will basically be USD denominated in the future, or will other currencies come and be stable coins as well?
It's USD. For any real market cap, it's going to be USD. Nobody wants anything else. We've never gotten a single request for euro or anything like that, right? So everybody everywhere in the world wants the dollar. That's the reality, and I think that stable coins for anything other than the dollar, unless you have banks really utilizing them for settlement, right? And you have banks being able to settle amongst themselves in stable coins. Unless you have some sort of mass adoption platform within a country, right, to encourage the use of a stable coin in any other currency, I don't see it happening. I think the dollar is what everybody everywhere in the world is looking for. Local currencies, I mean, it depends on the country, obviously, but at least for a lot of the markets that we work in, typically settle faster on local rails than sending a stable coin and then having to liquidate that to local rails and then send that payment anyways. So I think there's a reason that nobody's using euro stable coins.
Should we ask a question in the audience? Anyone? Where's the microphone? There's a gentleman over here.
Can you hear me?
Yeah.
Hi, good afternoon. I was curious, how do you mitigate risk? Is that something that you actively try and mitigate and talk to your customers, clients about and educate them on? Or is it something you just say, the base unit of account is a stable coin and that's that?
Pegging anyone?
I mean, we sit in stable coins for, seconds, right? A customer is sitting in stable coins for a couple of minutes. Again, I mean, we're using these for transactions, right? We're not using this for, the vast majority of companies that we're working with are not using this for savings. They're not using it for, really for storing value or anything like that. They're using it for facilitating payments. Right, so I have money in country A. I need to get it to country B. How do I facilitate that transaction in the quickest, smoothest way? So I think the depeg risk is pretty minimal, right? In terms of is the currency going to blow up in the next 5 minutes? Probably not, right? And so I don't see it as a massive risk. I don't think most of the customers that we work with see it as a massive risk because it's just such a short time frame.
Anyone else think about insurance risk?
I think the major stablecoins have done a pretty good job being transparent about what they're doing with the USD. Specifically, they have their T-bills, which the majority is sitting in T-bills. So unless you think the U.S. is going to default, which is a possibility, but not a big one. The vast majority is there, and then their balance sheet and so on. And I think that's one of the big moats that some of the bigger players have now, that they have also a huge balance sheet besides what they're doing with T-bills. So we don't see it as a major risk. But like Chris said, for us, as an infrastructure layer, we just do transactions, so we don't take major risk on the stablecoin itself. But we're quite comfortable with specific USDT.
Yeah, for US defaults, we have a lot bigger problems than what's going on with our stable coins.
I think I just want to give an example in Argentina. So in Argentina, they have a lot of inflations out there. So for the people living there, holding their own currency is a risk. So they want to sell their own currency to USD, but they have no way to do it because the bank doesn't provide any USD bank accounts. And stablecoin become the only solution for in the quick way to hold some sort of USD. So then, if you're providing a platform, a solution to buy the USDT with this immediately, is it really helping them? And then once, there might be a risk on the sell side, but for a company like us, we already have very mature trading desk, hedging department, risk control. We have all kinds of the infra to support liquid out and to hedging our position, to making sure that we're profitable, from what we're selling.
I suppose in Argentina it's very dangerous to hold meme coins. USD. Anyone else question here?
So companies are still launching new US dollar stablecoin, even though there are two big giants in the market right now. Are there any aspects of these new US dollar stablecoin you see that could bridge any current gaps or current efficiencies in the two big giants that would make it a third or actual sizable coin?
Maybe yield-bearing stablecoins. Anyone?
I think this is a very good question. For last year, there's over 10 different USD, 10 different kinds of the USD stablecoin come to Mexico, and one willing to partnering with us. But unfortunately, it's really hard, to be honest, at least at this moment, unless you are PayPal. Right? PayPal have their PayPal USD. And if you go to the marketplace, you're checking on the daily transaction value between the different types of stablecoin, and then you will see USDT and then USDT will be dominant, and USDT is still much larger than USD in fact. And the rest of the stablecoin will be much, much smaller. And I know there's a lot of new type of the USD packed stablecoin, but I will say there's a huge challenge in front of them because you need a lot of money to back you and to provide the liquidity in each of the country, and because we need a very fast settlement. And other than that, I think that's the challenge in front of like Paxos and Gemini and all those like big name or stablecoin. They have less value, I think, than us, and we have a real use case. But we don't, at least us, we don't issuing any USD stable coin. But one day, if for example, like a company like us, we have huge value moving between different countries, we can issue our stable coin. For example, like there's a company in the US called Bridge, just acquiring by Stripe. They newly launched a stable coin, and they will provide a yield on top of that. I think that's a good use case that might have some opportunities for new USD stable coins.
I'll be a little bit more controversial. So I will preface this by saying that obviously USDT and USDC are the most liquid stablecoins today. However, I think that they are the worst positioned in the market right now. I think that PYUSD and RLUSD, Ripple and PayPal are actually the best positioned stablecoins right now for the market moving forward. And the reason that I say that is this entire market is going to change in the next 12 to 18 months. USDT and USDC only make money one way, which is you hold the token and they get to put the money in treasuries and then they keep the yield. And you have several. Sorry. Yeah, I mean, Tether is like the most profitable company in the history of capitalism per employee, right? So yeah, they've done very well. This is not to say that these companies have not done well. I just think that when you look over the next 12 to 18 months, you have several factors working against that business model, right? You have Trump in the White House who is promising to bring interest rates down. You have increased competition from yield-bearing stablecoins, right? The Paxos and Mountains and others in the world. And you have this overall movement right now in stablecoins to give more and more of that yield back to the consumer. Right? You already see this on like Coinbase. If I have USDC on Coinbase, Coinbase gives me 4.7%. Right? So essentially, the entire yield that they're earning is already going back to the consumer, and you're going to start to see more and more of that as USDT and USDC keep up with yield-bearing stablecoins and things like that. The thing is these guys have no other way of making money right now. USDT and USDC have not invested in the on and off ramp infrastructure outside of US dollars that I think it is important for them as stablecoins to really look into and really get into. The future of stablecoins is on payments. And the reality is you can make a lot more money on payments than you can sitting in treasuries, right? Right now Tether makes 5% a year on a dollar. You can make 5% a week on payments. You can make 1% a day, 50 bips a day, and you can cycle that money as many times as people need the payments, right? As opposed to being able to cycle that and make that revenue once a year. And so, I think that when you look at stablecoins that are being issued by companies that actually have payment networks, right? PayPal, Ripple, etc. And look, a lot of it depends on their execution. Are these guys going to be able to integrate the stablecoin into their existing payment networks fast enough for this matter before companies like Visa and MasterCard and banks get into the space, which they will, and they will all issue their own stablecoin eventually. That's the big question. But I think that the companies with existing payment networks that have alternative ways of being able to drive revenue and earn money off of their stablecoins will be in a much better place in 12 to 18 months when these issuers are fighting over 25 to 50 bips instead of fighting over 400 bips right now.
Next question.
Do you see a future where people opt to hold their assets more in stable coins? Now, given what you've said about the yields, the possible yields in stable coins, do you see a future where instead of using it as an intermediary from one fiat to another, people choose to hold their liquidity in stable coins?
Yes, if they have a reason to. And again, my core problem today with USDT and USDC is there's not really, outside of being a company with a US bank account, there's not really a good reason to hold these tokens, right? Because what can I do with USDC today? I can give that back to dollar account, in the US in my name. So if I'm a company anywhere else in the world that can't get a US bank account, that cannot get, local onshore, rails in Europe, US, and other markets, which most companies can't, right? You look across, Africa, Southeast Asia, Latin America, right? Most companies operating in these parts of the world can't just get a US or European bank account in their name that enables them to smoothly interface with something like USDC. There's no reason to really hold it in that case, right? Unless you have alternative on and off ramps. And so, I think that in order for people to really want to sit in stablecoins and for the AUM to go up, you need to essentially provide people a US dollar banking alternative on stablecoins, right? I need to be able to hold USDT or USDC and then make a payment, make a dollar payment to China, to India, to Europe, make a Naira payment, a Euro payment, etc., from some sort of base. But until then, I don't see people necessarily holding stable coins for longer periods of time on chain unless there's more on and off ramps available to do something with it.
Another question?
I have a question. Is there any rule about no US dollar stable coins such as Hong Kong stable coins?
Sorry, can you repeat the question?
Repeat the question. Sorry, I didn't hear.
Is there any room about non-US dollar coins, such as Hong Kong stable coins?
He's asking about non-US dollar
Non-USD
stablecoins.
Stablecoins
I
in
think
Hong Kong, yeah.
I think Chris just mentioned a little bit. Now still USD dollar stablecoin be dominated. But for example, like we're in Mexico, we're issuing a Mexico stablecoin. So we have our own pesos packed stablecoin.
Right.
But it's not a lot of value, to be honest. Because this is kind of like intermediary for us. And because every single users, when they're on board, they have to use our stablecoin, and then immediately they will change to like USD,
Right.
and they will use USD across the country globally. So value-wise, at least for our case, local generate stablecoins still are quite small. Yeah. I'm not sure you guys have any.
I think we've got time for one more question.
She won.
Right here.
Right there.
Can we?
First of all, thank you for all the insights you shared with us today. My
Yes,
question,
thank you for the insight.
yeah, so thank you so much. That's the first thing. And my question is about what are the challenges, like the biggest challenges you are facing when you are collaborating with highly regulated financial institutions?
Yeah, I think the regulation is one of the biggest challenges.
Yeah, I think the regulation framework is the key. And when it's a green line from the top regulation, then you can and the financial institution is willing to adapt new technology, then they will potentially like moving toward this new stable coin. Otherwise, it's very, very hard.
Yeah, I think today the world, especially when we at like 2025, compared to 2020 when I first landed in Mexico, the regulators are much more open-minded, and you have much more legal framework to follow. And for example, like we years before, Argentina doesn't have any license, and like related to crypto. And after the new president be elected, and they're launching a new license which we already obtained. So I think it getting more like friendly for our industry, and it's a good thing. But I think there's still have a lot of things that we need to do. It's a long way to go, and there are a lot more countries need to launch their new regulation framework for our industry, and that's still a challenge, I think.
Yeah.
Great. Well, that's all the time we have. Thanks very much for coming, and thank you to Mosh, thank you to Chris, thank you to Maggie, and thank you to Trump for all your insights. Thank you.
Pleasure.
Yeah, I appreciate it.